Welcome back. And Merrill here with some of the other stocks which are buzzing in trade and some of the triggers to that. Merrill, what do you have on your list?
Well, yes, here's a list of stocks that are buzzing in trade so far today. Starting up first with RT Industries. Now, the company has secured a $150 million medium-term contract, securing revenue visibility for it till the March of 2030. Now, at today's exchange rate, that translates to a 1,384 crore top-line potential over the next 4 years, or an annual revenue of approximately 350 crores, which is close to 5% of RT Industries' FY25 revenues coming from one single contract. As expected, it's turned out to be quite a positive signal for the stock, up around 5% today. Meanwhile, auto stocks are under tremendous pressure again. The likes of TVS Motors, Mahindra & Mahindra, Maruti Suzuki and Ashok Leyland have all taken quite a beating today. The weakness comes from concerns over rising input costs, high oil prices, as well as possible supply chain pressures from the West Asia conflict. Also buzzing in trade today is Precision Wires India. The company's formally disclosed supply chain disruptions, saying that the West Asia conflict is starting to affect both domestic as well as overseas suppliers. They've also flagged inflationary pressures across the supply chain, which could lead to a higher shipping cost as well as longer delivery timelines for the company. While on the positive side, Gopal Snacks is taking steps to ensure operational continuity by using biocoal at its Modasa as well as Nagpur facilities, which is a move aimed at reducing fuel dependency as well as ensuring uninterrupted supply to its customers. So yes, that was a quick list of stocks that are seen buzzing in trade so far. Back to you.
Thank you, Merrill, for that update. We have now Pramod Gabi joining us. Pramod, hi. How do you look at this market? We've seen a good, smart rebound for this market, especially the mid-cap space as we speak.
Yeah, I mean, look, it is a tricky situation out there, given that some of the risks are simply something that none of us can really predict. So we have to work with certain assumptions, certain scenarios. Of course, in the scenario that the situation sort of persists into a more prolonged crisis, then I guess it's going to be a difficult situation because India is significantly exposed to the global macro through the energy route, and all of our macro fundamentals, which we're looking pretty strong, can come under question, and that in turn can have implications on the broader economy through inflation, the fiscal deficit, the rupee, as well as consumption in some ways. So barring that sort of a situation where the crisis prolongs, I reckon with the assumption that we quickly done with this crisis, the market could throw up some decent opportunities. I reckon we've been concerned about elevated valuations, so any sort of correction is more than welcome. But also, I reckon we're moving into a market structure where this is increasingly becoming a bottom-up market, as opposed to some obvious themes that we had seen in the past. To that extent, it is great for stock pickers. You have to keep one eye on the situation because you don't want to jump into this and say this is a great buying opportunity should the scenario one play out. Having said that, I think we've seen these situations in the past. Often the best buying opportunities come during crisis, so you need to be more optimistic while at the same time keeping an eye on the emerging developments.
How do you look at the power and energy stocks today, because they are the outperformers in today's market?
Well, we don't look at day to day. Like I said, we are long-term investors. We're looking for opportunities. We have been circumspect on the markets for a while. In fact, we had a substantial cash position in our portfolios, which has come down over the last 18 months or so. We still have decent cash. We're looking for opportunities, and we are seeing some quality names also correcting in the broader corrections. So yeah, I mean, I won't look at the specific day of movements, but otherwise, yes, I can see some of the names on our shopping list starting to look attractive.
Part of that shopping list for you?
Well, like I said, it is a bottom-up market. We are quality investors. We look for companies with strong ROCs, clean accounts, and sustainable competitive advantages. In the past, we have been less fussed about valuations, but we live and learn, and therefore this sort of a correction is something that we look forward to. If those quality businesses are available at attractive valuations, that is an opportunity for us. Having said that, I must allude to certain themes. For example, in sectors, I think financials looks attractive from a valuation standpoint, particularly private sector banks and certain select NBFCs, which have quality characteristics there. Had run up, had done really well, but over the last 6 months have corrected to more attractive territory. From a structural basis, we've been positive on healthcare across hospitals, diagnostics, pharma, on manufacturing side as well. While valuations are not particularly attractive, given the structural nature of the growth opportunity, I think we'll be more constructive on that. And thirdly, I think there is an emerging opportunity coming through the impact on the rupee. We've seen, until recently, the talk was about AI impacting IT services. Should that play out, I think that would put pressure on the rupee. And even this crisis clearly negative on the rupee. Should the rupee continue to deteriorate, I think, given the FTAs that we've signed up, there could be multiple opportunities in manufacturing exports that could come up, be it engineering goods, chemicals, or traditional sectors like textiles, gems, and jewelry as well.
And Pramod, hi, this is Harsh here. Let me unpack this a little bit more. So you suggested that you were sitting on a cash position maybe 18 months ago. What was that position, if you could give us a perspective, and what's the cash position right now?
Well, in the small caps, we had gone up to almost 40%, and that's down to about 13% as of now. We have been deploying cash through this correction. I think the peak was in August 2024. But then, we are seeing increasing opportunities to put that cash to use.
Pramod, you spoke about a couple of pockets of space where you're finding things interesting, especially on the banking side of things. Let me first take that. What would the tilt be? I know for a fact that Marcellus has, and when I'd spoken to Saurabh earlier, he spoke about how HDFC Bank was something that he was really positive with regard to. Talk to me about now that there is a 15, 16, 18% correction in the stock price. Of course, it will look likely more attractive, but what explains this very large underperformance that you've seen with regard to that stock? Because when you're looking at the 5-year returns, it's zero.
Yeah, absolutely. I think there are two effects, one long-term and one short-term. I think the long-term effect is, say, through the last decade, say from the 2010 to 2020, given that a whole host of other banks, including some private sector banks, had structural asset quality issues, which in turn created balance sheet issues, which took away their ability to grow. As a result, even with a muted credit growth environment, an HDFC Bank could grow at 20% plus for almost a decade. Now, while those earnings growth delivered a lot of the share price appreciation, alongside that, given the scarcity in the market, there were hardly any stocks, particularly in the banking sector, which were investable during that period. A lot of capital just went into a handful of these names, and alongside the healthy earnings growth, these stocks saw a lot of re-rating as well. Now, post-2020, we had been through a bout of recapitalization for the rest of the banking sector, whether it's PSU banks or a couple of other private sector banks like ICICI and Axis, which didn't participate in the growth in the previous decade. That scarcity went away, and therefore that sort of re-rating resulted in de-rating at this stage as money moved out of HDFC Bank into a whole host of other financial stocks. That's the longer term story. Having said that, in the shorter term, I think private sector banks, including HDFC Bank, did really well up until about 6 to 8 months ago. But over the last 6 months or so, the action has moved towards PSU banks. PSU banks have clearly gained market share. They've grown loan books at almost double the rate as private sector banks, and hence, stock prices have also outperformed there. My reckoning is, there will be a shift typically money moves towards quality names, particularly private sector banks, in crisis sort of situations. Should this situation prolong, we could see an unwind in that trade from PSUs to private sector banks. We are not able to predict the precise timing of it, but given the quality nature of these banks, particularly HDFC Bank, we reckon on the longer term basis, particularly given this correction that we've seen, it provides a very strong or attractive entry point.
Your point, Pramod, but when you're looking at the last maybe 3 to 4 years, PSU banks have consistently outperformed private sector banks. Do you believe that you've somewhere missed that opportunity as part of the thesis for the fund? And second, at what point does this turn around? Because the cycle, I mean, there are very few in the market who feel that the cycle won't turn. The cycle will likely turn. What's the timing of that? What are the triggers of that? At what point do you anticipate that to happen? Because you would have studied this entire underperformance and you would have a view on that, I reckon.
Yeah, I mean, look, you're bound to miss some opportunities all the time. So I don't think we can sort of sit back and rue over it. Having said that, I don't think PSU banks have consistently outperformed in the last 4 years post-COVID as well. We saw about through 2024 where PSU banks did underperform. There was a massive sell-off there. It's only in the last 8 months, again, they've come back. Of course, the first couple of years post-COVID, most PSU banks outperformed private sector banks massively. And then we had a hiatus where private sector banks came back into the reckoning. Now, these cycles are hard to predict. Having said that, we go back to our understanding of the strength of these banks, the strength of their lending prudence. Remember, it's easy to grow loan books. The harder piece is to collect the money back. And I think HDFC Bank is amongst the few banks which has had a pretty long history of maintaining pretty low NPAs. And as a result, give more consistent earnings growth and returns for investors. Whereas PSU banks have had a checkered past. And like I said, for almost as long as a decade, they went through a period of addressing those asset quality questions, and therefore letting the balance sheet get weaker before having to get recapitalized by the government of India using taxpayers' money. So we would like to see a prolonged performance in PSU banks on the asset quality front to get a sense that these are more structural bets, particularly important for long-term investors like us.
Okay, all right. Pramod, thank you so much for joining us and giving us that perspective. We'll let you go on that note. All right, let's slip into a very short break. We'll continue coverage on the other side. We'll talk a little bit about auto on the other side of this break. Stay with us. Welcome back. And ACMA has written to the heavy industry minister amid the gas supply disruption as auto ancillaries flag concern at the same. My colleague Shrishti joins in with all of the details with regard to what was written and what the concerns are.
Well, yes, the situation is concerning with respect to the gas supplies to the auto industry, and actually ACMA has written a note to the ministry highlighting the issues that they are facing, and they are also looking out for an answer from the ministry in order to have some clarity that when the gas supplies will be back, because as we know that the industrial gas supply has been hit and they are being done in a very limited manner. And most of these auto ancillary companies specifically, and add to that is the OEMs, they are at a vulnerable stage. Now, with respect to the segments that are expected to get affected the most, it is the forging companies that are at a greater risk because their dependency on the gas side is on the higher side. And add to that is some of these paint divisions as well, which require a lot of gas from the OEM perspective, that might face some challenges, because do remember that March is one of those months which is the financial year end, and auto industries and companies rather, they want to make the full use of this financial year end, and the production is at a full swing. The companies do get ready for the marriage season as well, and just before that this sort of supply challenges, and especially with respect to the energy supply challenges, they are actually not good, because ACMA is also highlighting that even the raw material costs are having a lot of surge. Aluminium scrap imports from Middle East have been halted. Shortage of the key petrochemical linked chemicals is also the industry is witnessing right now. There are exports concerned because exports order fulfillment are turning challenging, and especially from the likes of the US customers. They are most vulnerable to delays. So ACMA as of now seeks a clarity and visibility on the gas supply from the government. We also did some channel check with the Pune belt OEMs, and we understand that yes, the gas supply has been hit. Some of the segments really don't have any sort of a gas. Is the paint shop and the furnace operations that are getting affected, and switching to alternate energy is not feasible at this point in time. Back to you.
Okay, thank you so much for that, Srishti. Now, within the auto anch packs, Kunal, if I can come to you, are there any preferences? Because you're starting to see some of these stocks in some real pain. In fact, there's been a recovery from the lows as well. So, do you believe that some opportunity is cropping up, or you wouldn't at this point want to touch this space?
No, I think many of these stocks have apparently bounced back from their maybe 3-month or 6-month lows. For example, Sona PLW, that's a stock which I think 3 months or 6 months back, in the month of November, somewhere I think the stock had formed a low which was around the 420 mark. From there, the stock had moved towards 540, 550 levels, and it's still now migrating above the 500 zone. So it's managed to cushion itself very well. You've seen Motherson, Samvada Motherson also, I think that stock has been doing fairly well for itself from a sub 100 level towards 130 or 127, which was the recent high for the stock price, and now towards 120 mark. So many of these stocks, they've established a bottom for themselves 5-6 months back, and they're still trading at a slight higher cushion for themselves. So this could turn out to be a good pocket where traders could look at a bet, but I think it's always better to try and wait for that one level of a swing breakout for these trades. For example, I think if Sona, BLW, that stock manages to cross 523 levels on closing basis, that would confirm a breakout of its short-term moving average. For Motherson, Samvada Motherson, that level is closer to 123.5, 125. So I would probably wait for that one level of a confirmation of a breakout before initiating a trade into this sector.
Okay, and Kunal, if I can quiz you with regard to the OEM pack, and we spoke about this morning, where you said that some of them going to start looking interesting at some point over the next few days. We've seen now a 2.5% correction on some of those top-rated OEMs, right, within the Nifty auto pack. You've seen Tata Motors, PV, M&M, all of them seeing that. Good time to start nibbling?
So, again, I think as a sector, it is very strong. You look at the last 8 months of price performance, auto was amongst the top 3, top 4 sectors. In various phases over the last 6-8 months, it's just that with the current hit in terms of crude oil prices and the sentiment, has dampened the auto stocks largely. But it's still one of the stronger sectors. Now, even if you go back for the last 4 or 5 years, even in phases of 2024, when the selling started off for the market, and the GST cut announcement, which was done in August 2025, in those phases also, I think auto had done reasonably well for themselves. So I'll stick to the large cap ones from the auto pack. I would still believe the likes of Eicher Motors, M&M to a larger extent look fairly positive, attractive at the current juncture. You might want to take some bit of other names like Ashok Leyland or TVS Motors. Even these stocks have slowly, gradually looked very attractive on the longer term charts.
If you look at last 1 month, Kunal, Nifty Pharma is up nearly 4% in the last 1 month. Nifty Healthcare is up 2.5%. Nifty Defense is now up 1.9%, and Nifty Energy after today's move is up nearly 1.2%. So it's basically these are a few sectors where I think people are trying to take some. They're hiding behind these sectors because these are the defensive ones at this point in time. Within the pharma pack, the Sun Pharmas, the Cipla, Dr. Reddy's, Lupin, how do you see these stocks?
So the strongest ones, we did a relative strength study, I think a week or two back, when we were looking at the pharma index breaking out of a multi-week consolidation. Now, in that process, Lupin, when the stock, I think, crossed 2177, 2200 levels, that was the point when the stock came out to be a relatively stronger stock from the large cap pharma peers. The other names like DV Slab and Dr. Reddy, they were trying to just about show signs of a breakout of their major swing resistances in the second rung. And then came the likes of Sun Pharma, which I think recently managed to cross that 1800 levels, is showing signs of strength of a potential turnaround for the stock price on the weekly as well as on the monthly chart basis. The only drag on the pharma stock in terms of relative scale again, I think has been Cipla, because that stock, even at current levels, if I'm not wrong, is still trading below its 200-day moving average. From the mid-cap arena, I think Glenmark Pharma has done very well for itself. Glaxo is something which has been very attractive on the charts. Aurobindo Pharma has come out quite well from that breakout of 1200 mark to now 1300 plus levels. That's another name which is looking attractive. And one more addition to this mid-cap end of the pharma stock has been Biocon. That stock has been just about trading closer to a major breakout point about that 400 levels. I would sense that the moment we get maybe a couple of weeks of closing confirmation on Biocon about this 400 mark, we could be looking at a big upside for the stock in the medium term.
If you're going to look at what's happening in the F&O market, there's interesting stuff happening there actually. There's a lot of put writing which is happening as we speak. To begin with, let's start with the Nifty futures, where the index is down nearly 0.7%. We've lost some amount in the last half an hour of trade or so, but the open interest, there's a short buildup which is happening, 4.3% up in Nifty futures. In Nifty Bank, again, the index is weak, down nearly 0.9%, and the open interest is pretty much flat in that sense. We are seeing some long unwinding happening in Nifty Bank there, but look at the constituents which is coming in for Nifty Banks. You have SGFC, where we are seeing long unwinding happening. We have Axis Bank short build up happening. You have Axis, SBI, Kotak and IndusInd, where you have a short build up coming in. This Bank of Baroda, BOI, Federal Bank and PNB, where there's some long buying happening there. Among the if you look at how open interest is faring for the Nifty options, you're going to see 23,600, where the highest options writer are most active there. 26,600 seems to be the most active one, followed by 23,700, where the options writers are active. But from a call point of view, you have good call writing happening at 23,800 and 23,700. And if you look at the distribution, how it moves, it gives you a good picture of where the resistance at the top end remains. But it's the build up which is happening towards the lower end, which is very interesting. 23,000 continues to be the most active put, but we have 23,500 and 23,600, which are good support levels coming in. So you're going to see some kind of, there's some put writers having a fight between at 23,700, where the put writers are greater than, the puts are greater than the call writers at this point in time. So you are seeing some kind of resistance with respect to the index coming down. So there is a support coming in for the market there. But look at futures gainers. You have JSW Energy, SRF, BHEL all up 7.5%, 5% and 5.14% there. And among the losers, you have futures losers, which is Piramal Pharma, IndusInd Bank, Amber Enterprises, all down over 4% in today's trade in the futures market. Among open interest gainers, you have some of the power stocks and Coal India. The open interest for Coal India is up nearly for 10.5%, and Tata Power is also up 10.8% there, while Amber, we are seeing some short build up happening with the open interest up nearly 12% in Amber. Among open interest losers, you have Divi's Lab, where you're seeing long unwinding, and RVNL and IRFC, where there's a short covering coming in. And if you look at what's happening in individual stocks, that's interesting coming in. NTPC 400 call is the most active call as we speak, with 24.8 lakh contracts getting added and the premium up to 2.75 rupees. Among the other active call, you have Reliance, where Reliance 1400 March put, where the premium has fallen by nearly 9 rupees and the open interest is up nearly 8.57 lakh contracts there. So Eternal is also one stock. 200 March put is something which is interesting. 24 lakh contracts got added there. The stock is down 1.5, and the stock is hovering around 222 odd levels, which is there. and it pretty much it's very active put which is happening at this. It's among the top 3 as we speak. So that's an update coming in from the FNO 360 snapshot. I will step into a small break and come back with more on the markets.
Tensions continue to rise and fuel shortage fears have gripped motorists in Chennai. Long serpentine queues are seen outside petrol pumps across the city. Panic buying has picked up, with drivers rushing in to fill their tanks amid worries of a possible shortage. My colleague Jude gets a ground report.
Scene that can only be described as quite chaotic, and I say this with measured words simply because that is indeed quite the case across petrol pumps in the city of Chennai. In fact, if you can see behind me, a number of motorists, scores of them in fact, have queued up to fill up their bikes, fearing an imminent shortage in petroleum and fuel as the day progresses. In fact, this has pretty much been the case throughout last night as far as Chennai is concerned, which is of course continued till early hours of the morning and well into the afternoon today, as scores of motorists have come by hoping to refuel their bikes and cars, with lines stretching into serpentine queues, even as quite literally panic persisting at the pump. Now, a lot of these motorists have come by believing that an imminent shortage can be expected. A number of them also say that they fear the possibility of petrol prices skyrocketing to unmanageable levels. However, the fact remains that almost all petrol pumps we've spoken to have told us in no uncertain terms that there is, in fact, ample supply of petroleum locally at these pumps, and that there is no reason to panic. In fact, to our knowledge and from what we have picked up, not many petrol pumps in Chennai have actually reported a shortage or running out of fuel stocks. So a lot of what you're seeing here essentially is panic buying on account of certain reports on social media or hearsay that petrol may be running out, and even if it doesn't quite run out, that prices may in fact skyrocket. And the result, of course, is a whole lot of panic buying that you're seeing at petrol pumps like the one I'm coming to you from.
Okay, thank you so much for that ground report, Jude. Of course, those scenes at the back visible with regard to the kind of frenzy that's been seen in the market with regard to this. But OMCs, Kunal, of course, they'll see a correction. And as crude prices go up, they'll have to absorb those higher crude prices. How do you view it at this point? Would you care picking up any of the AMCs for a quick trade if something were to reverse?
Not really. I think I'll still go for a wait and watch approach over here for the OMC pack, because even after such kind of a price downtick which you've seen the last 10 odd days for these OMC names, it's still a lot of uncertain environment over here. There could be probably a bounce back which could happen to the stock price, but how lasting could that be? That's something which is very difficult to anticipate. Now, price-wise, yes, many of these OMCs are retesting their, I think, the previous month or the month prior to that, the month of January end lows, where, for example, IOC had come back towards 155 kind of a zone, and from there it moved towards 185, 190 levels. It's now come back to that 155, 160 mark. So price-wise, these stocks have come back, but the manner in which the stock prices are correcting probably puts in place that maybe there could be one more round of a correction before these stocks look a little bit more attractive. So more of a wait and watch approach over here.
Okay, wait and watch. What we'll do is step in a very short break. We also have Arpit Beriwal joining us on the other side, giving us his views with regard to all that's playing out in markets. Stay with us. We'll take those views from Arpit on the other side. To the ongoing West Asian conflict, my colleague Anurag Shah is joining us from Vijay Sales at the Prabhadevi store to give us a sense of what's going on in store.
On online platform, sales of induction has gone up by 20 times, 30 times, 50 times, but on offline stores also, retail stores also, induction is out of stocks. I'm in Vijay Sales store in Prabhadevi area of Mumbai, and you can see few induction options are there, but there is a waiting time for new buyers also. Ma'am, you bought one induction?
Yeah, we just booked one today and they told us it will take about 10 days.
10 days?
Yes, so we are just keeping one as a backup because in the news it's all over the place that LPG shortage is there and all of us using gas ovens mostly. So I think it's high time now we invest in a small induction just as a backup in case there's a problem.
Okay.
We hope it won't be, but in case there's a problem, yeah.
So we can see there are a few other buyers also. So everybody is buying these induction for a backup only?
I think mostly right now they're buying it as a backup. There are a lot of people who are using inductions regularly, but those are buying it right now. I think it's more for a backup and because of the LPG shortage.
LPG.
Yes.
So we have reported that LPG shortage which restaurants are facing in Mumbai only. No commercial cylinder, non-domestic cylinder is delivered in last 6-7 days, and now there is a rush for induction also. In this Vijay Sales store only, as we have spoken to the manager and other officials of Vijay Sales, they are saying that their sales is also up by 20 times. Previously, across their all stores, they were selling around 40 to 50 induction per day, but now they are selling or booking more than 1,000. And we just heard that there is a waiting period of more than 1 week for new induction because induction is out of stock due to high demand.
Okay, thank you so much for that, Anurag. That's obviously us catching up on ground, but we also spoke with Rajendra Gandhi, the managing director at Stovecraft, to decode this trend which is playing out. Listening to what he had to say about the demand and price hike.
In the last week, we are seeing sudden surge in demand, particularly on the online channels. We are able to get data on the same day. So there is a huge surge in the DRR, daily run rate of sales of induction cooktops on these channels. And currently, there is a spike of between 5 to 10x of normal sales on the induction cooktops. We correct our prices every quarter. We don't maximize on opportunities like this, but then there is a quarter coming up, the quarter that is starting 1st April. All input costs have gone up. There are a lot of disruption in freight, in forex costs, of course, basic materials like plastic, steel, aluminum, and copper. Because of all this, from the 1st of April, we have new prices that were even otherwise announced to the market, and we will have to pass it on to the consumer. At the moment, we continue to operate at the current price.
Okay, all right. Arpit, a couple of stocks, and let's pull up those stocks. Let's get a sense. Arpit Beriwal joining us from Motilal Oswal Financial Services. We also have Aditya Shah, founder, Hercules Advisors, joining us this afternoon. Arpit, let me start with you. Some of these stocks doing well in trade. Let's pull up a Stovecraft. Let's pull up a TTK Prestige. Would you at all trade any of these names, given the kind of moves we're seeing?
Very good afternoon to all. So if you see this overall theme, it has picked up good action in last couple of days. So particularly if you look at the chart structure of Hawkins, Stovecraft, overall, so definitely you've seen a sharp movement in last couple of days. Technically, if you see, today's Stoker open gap up and we have seen some cooler from the higher levels. So I think it's more of a kind of a momentum play that we can see for next couple of days. Having said that, the bigger trend is still weak. And if I look at the chart structure of TTK Prestige, so definitely from last couple of months, it is from lower as lows. But in last couple of days, we have seen very strong volumes. So it would be a kind of a high risk setup, very selective you have to keep, and it's better to play intraday rather than carrying it overnight. So I think it's kind of an intraday play, and within that setup wise TTK Prestige, one can go long with keeping stop loss of 545 for an upside move towards 600, 620 levels.
Okay.
Arpit, how do you look at some of the other stocks like an auto ancillary companies which are now complaining of impact of gas and subsequently it may percolate to auto companies as well?
But definitely, if you see overall auto index, first of all, so last couple of days we have seen a very strong selling across the auto stocks. Surprisingly, till last month it was holding very well, but in last couple of sessions we've seen a very strong selling from the high levels. So look at the chart setup wise, definitely there's some pain that is there. And looking at the price action also, whether it talks about the auto ancillary or auto four wheelers, two wheelers, we have seen selling across the auto index. So our sense is that from the technical level perspective, index was holding well above its 200 DEMA, and in the last couple of days we have seen that it has breaches its 200 DEMA, and sustained selling pressure is there across the board. So our sense is that it's better to hedge your positions for an immediate basis and look at the chart setup wise, such as counters such as Aisha, Hero, they were holding very strong, but now the structure has gone for a toss for the immediate basis. So better to reduce your positions if you're holding on the long side, and if someone wants to play on the short side, so we can go with the short counters such as Bajaj Auto, where the structure is relatively weak and we have seen good selling from the higher levels, and one can go short on Bajaj Auto with keeping stop loss of 9300, 9350 levels for a downside move towards 8850, 8800 zones.
Aditya, how do you look at some of the energy stocks which are flying today?
So, short-term problem is a long-term opportunity. I'm looking at gas players, IGL, MGL. Their volumes will get hit as the commercial gas is cut off, and the government holds back on the commercial gas in order to cater to the domestic gas and the CNG sector. So, from my perspective, IGL, MGL, the downstream companies which are into distribution, they will be hit. That could be an opportunity. On the other hand, the oil marketing companies, if oil prices continues to stay at this level, many of them will start to report huge losses, and that could be an opportunity to get in. So downstream companies, basically the oil marketing companies and the gas distribution companies, this is where I'm looking.
Also, if you can give us a sense of what's happening to Nifty Bank, we're seeing a certain spurt in selling coming in for Nifty Bank in the last half an hour.
So from my perspective, I am positive on Nifty Bank. Both private sector banks and PSU banks will continue to do well. In the shorter term, PSU banks have taken away market share from private sector banks, but I think private sector banks will come back and they will also do well. So from the larger pack, the companies like HDFC Bank or an ICICI Bank will continue to do well. For the larger PSU banks, an SBI, and a smaller bank such as a Federal or CSB Bank, they will continue to do well. So I think the next leg of the market, whenever it is higher, whenever this war-like situation gets over, banks will lead the market really higher. So they need to be a good part of your portfolio.
Okay, Aditya, at what point does this cycle turn? So, I mean, plenty has been spoken about the fact that private sector banks will come back and it's cyclical. But when does it turn?
This whole narrative that PSU banks are taking away market share from private sector banks is absolutely incorrect. If you look at 2020, the market share for PSU banks was about 58%. Today it is at 52, 53%. It is still lower than what it was 5 years ago. The largest bank in the country, private sector bank in the country, is handicapped because of the merger issues. They did not do a good loan growth this year. They are guiding for a better loan growth next year. But once HDFC Bank is back, then we can compare the private and the PSU banks. My perspective is the cycle will continue for at least the next 2 years. I think the larger private banks and the larger PSU banks will do well. For example, HDFC, ICICI, SBI, they will continue to do well. The smaller banks will continue to get hits. Both smaller private banks and the smaller PSU banks will continue to get these hits. For example, IDFC had a fraud. NPAs will continue to hit PSU banks as the Maharashtra government has announced a loan farm waiver. So from my perspective, you need to balance out. I think larger banks is where you need to stick, cautious on the smaller banks and positive on the microfinance side of the market, where stocks have been beaten comprehensively, and that's a good opportunity to create higher value.
Where do you sit on this debate, private versus PSU, from a short to medium term perspective? Arpit, that's for you.
So if we see the price structure of PSU versus private banks, so definitely in last 3 to 4 months, the structure wise, if we see the PSU index relatively outperform and the private banks are relatively underperform the large caps. So immediate basis, if we see, we have to be very much handful and stock selected within PSU bank, and our two preferred picks within the PSU index would be Indian Bank and SBI. So these two banks are a huge outperformer, and a sense is that from the monthly perspective, also for next couple of months perspective, definitely in last few days we have seen some selling pressure for the higher levels. So looking at the bigger time structure, definitely these two counters would be watch out for. Having said that, the small PSU banks is better to avoid. Indian Bank and SBI structurally they're positive, and from here on also we can see a good upside move. Talking about the private banks, definitely underperformance has been seen in the last couple of months, mainly due to HDFC, ICICI underperforming. However, seeing that ICICI would be a preferred pick within the entire private bank, so the stock has seen a good correction of almost 10 to 15% from the higher levels. And looking at the setup of the monthly setup, definitely it's trading near its 200 DEMA. So I think from a sense of the immediate basis, there is some pain, but definitely from a medium to long term perspective, ICICI would be a preferred pick, where we can see a good momentum towards 1300, 1400 levels in next 3 to 6 months perspective.
Okay. Kunal, let me come to you. With regard to some of the names within, for example, consumption, is there a view you have? Any of them looking interesting? Say, for example, a Titan, a Trent, for example, that's the other one, where you've suggested that the kind of levels which we've reached, where Trent is concerned, look very, very lucrative a couple of months back. Do you believe that now would be a good buying opportunity?
Yeah, price-wise, there's hardly any damage for Trent and such other names. In fact, I remember, I think there was a point where Trent was almost at 3,750, 800 kind of a zone. It moved back towards 4,000 mark, has come back to that 36, 3,700 levels broadly. So I think relative price scale-wise, there has hardly been any significant damage. It's just that the selling pressure for the stock price has reduced quite dramatically from a point where the stocks used to fall 10-15% on a single day towards a zone where the stocks they correct with respect to the overall market trends, and then they see a bounce back of sorts. So when you see largely a range of, in this case, you say a 10% broadly from their pivot points, so 3,900 thereabouts towards 10% plus minus for the stock price. That's a point where Trent and other stocks would look attractive. Titan, on the other hand, I think has been an outperforming stock. I remember, I think in August, September 2025, the stock had fallen down to 3,000, 3,100 levels. Even at the point when gold prices were rallying up higher, Titan continued to march up higher, crossed the 4,000 levels, 4,250, 300, which was the recent high, and still trading above that or just around that 4,000 plus mark. So Titan is something which has been an exceptional chart in the last 12 months. Rarely do you see these kind of phases where a stock like Titan goes into a 20%, 25% kind of a correction. But that generally has become a very good opportunity for long-term traders to try and lap up more for the stock.
Okay, that's with regard to some of the consumption names. Let me go across. The government may actually push ahead with plans to create strategic natural gas reserves, I beg your pardon, following disruptions triggered by the West Asia crisis. Sources say the oil ministry has already drafted a proposal and completed stakeholder consultations. Prakash joins in with all the details on this one.
Well, that's an important development coming in. We are learning from our sources that the government's plan to set up strategic gas reserves may gather momentum after the West Asia crisis, wherein we are seeing supply-related disruptions. In fact, the government is likely to speed up the process of setting up gas reserves in line with strategic crude reserves. In fact, the oil ministry has already prepared draft proposal. We had reported earlier about the proposal prepared by the oil ministry. Stakeholder consultation has been completed. In fact, the initial proposal suggests setting up a dedicated entity on the lines of Indian Strategic Petroleum Reserves Limited. It also suggests companies such as ONGC, GAIL and AIL to set up the entity. Additional storage at the existing terminals was also part of the proposal. However, not much work has been done so far, but the sources are now indicating that the government is likely to expedite the process to deal with unforeseen situation in the future, what we are witnessing at this point of time, which could ensure price and supply stability. Back to you.
Okay, all right. So that's with regard to natural gas reserves. Aditya Shah, I wonder how risky are or how much of risk is actually built in, given the fact that there are companies like Borosil Limited which actually came out this morning, or rather late last evening, and suggested that there's going to be some drag with regard to production. How much of a risk is this on industry, and probably which are those industries or sectors which will be the deepest impacted as a result of everything that's playing out relating to natural gas?
So this is a huge risk for almost the entire manufacturing industry. Gas is an essential part of, let's say, a chemical, let's say, an auto company, let's say, AC manufacturing company. We saw PG Electroplast stock fall by about 12% when they notified that Gujarat Gas had stopped their put out gas. Gujarat Gas, which is the biggest supplier of gas to commercial companies across Gujarat, has put severe restrictions on the supply of gas, and this will hamper all of these companies in a shorter term. So, from my perspective, for example, a very big chemical company has also declared force majeure because they are not getting decent amount of gas to operate their plants. So from my perspective, this is a problem for the entire manufacturing industry, from cap goods to the chemical companies, to the auto companies, to the entire manufacturing sector. But in the shorter term, the market already knows it. The market will discount this, and the market will move on. It will wait for this war to settle down before giving any of these reactions. So from my perspective, negative in the shorter term. If you get discount on companies because of this, it's a great opportunity to buy. However, longer term, this will not affect any of these companies.
Yeah, Arpit, how do you look at some of the gas companies? Today we've seen Adani Total up there. Among the renewables, we have seen NTPC Green, which is up nearly 15% or was up 15%. Some of these companies.
So definitely, if you see the theme that is going out, the gas and the energy space, so energy sector has relatively outperformed today. And if you see whether the market is in corrective phase, but the selective counter is still outperforming. So I think from the NSE 500 space, if we first look at the chart of NTPC Green, so today, if you see post its listing, today has been one of the sharpest up move that we have seen on the daily time frame, with massive increase in volumes. And look at the technically from a short-term perspective, definitely it is given a range breakout above 94, 95 levels with good surge in volume. So I think look at the impact wise, definitely some more momentum can be seen towards 103, 104 levels. So I think NTPC Green relatively looks good and managed to surpass 200 DEMA. So I think NTPC Green looks good. Apart from that, if we talk about chart structure of Adani Gas, so generally this counter has been quite a high beta counter. Relatively from last couple of weeks to time frame, it has been underperforming from last couple of months to weekly time frame. So it senses that it's just a pullback move that we can see on the bigger time frame structure, but it's better to avoid such counters and better to play within the intraday basis, because the bigger structure is still in pain. And as we have seen a abrupt move in last couple of sessions, the risk reward is not favorable. NTPC Green relatively looks good, so one can go long in that for a pullback move towards 103, 105 levels.
Okay, all right. Let's in fact continue to stick to this set or this sector. We spoke with Mr. Sarit Maheshwari, who's the CEO of NTPC Green Energy, and he spoke about how the company's expansion strategy, upcoming operational capacities, projects currently in the pipeline, and the key challenges ahead, highlighting that the company is actually facing delays in commissioning ventilation projects, primarily due to the ROW issues. Listen in.
If you speak about NGL as a group, currently you are right, we are at a capacity of 9.5 gigawatt, which we have commissioned. This year alone, we have till date commissioned 3662 megawatts, and we have plans of reaching 5 gigawatt. In the next 2 years, our capacity will increase by 8 gigawatt next year and another 8 gigawatt next year. This gives a total pipeline of around 30 gigawatt, where we would be somewhere around 20 2029. Now, these key challenges that you want to know currently is that we are facing most of the challenges have now been addressed. Earlier, there were certain challenges with respect to the transmission networks and all. Those have not all been addressed. So therefore, you are seeing that in this last quarter, we have already done around 1.5 gigawatt, and the balance around 1,000 megawatt more will be coming. So as such, the major challenges, if I would really like to bring out, is we are facing on the wind projects, wherein there are certain ROW challenges that are coming up. Apart from that, we are very much on our capacity addition plan.
All right, Aditya, let me come to you within this entire power supply chain. Firstly, what's the kind of outlook you have over the next 2 to 3 months? Because we're already seeing record power requirement coming in, given the fact that we've already started to see an accelerated summer season come through. Would you play it through power? Would you play it through consumer durables? How exactly would you play it? Even within, if at all, power, then even within power, what are you bullish on?
Also, from my perspective, power demand is going to surge all across this summer. We are expected to have a record summer, and some companies will benefit out of it. My topic will continue to remain IEX. IEX, although it has got market coupling problems, IEX continues to do exceptionally well with respect to its business. Business is going really very strong, and the day-ahead market continues to do exceptionally well for the company. So the topic here will remain IEX. Then there are companies which manufacture ACs. Let's say, for example, PG Electroplast or an Amber or a Voltage for that matter. These all companies will continue to do exceptionally well as the demand for AC surges as we see a record summer. So rather than the power producers, I would like to play this surge in demand with respect to all of these aspects.
Surprised, Aditya, Voltas. I've rarely seen you recommend a stock which is at a price to earnings ratio of 92 times.
So I said these companies will continue to do well, but I am particularly not an investor in these companies per se. You can look at these companies to invest, but however, as you said, the valuation continues to remain aggressive on particularly Voltas. My topic continues to remain PG Electroplast. It is also really very expensive, but a good correction in this gas fall will remain. That stock continues to remain one of the stocks on my radar.
Okay, point taken. Arpit, tell us how you would play this entire theme which we're just speaking about.
So if I see overall the energy sector, so definitely there are selective pockets that are doing really well. So first pick from the short-term basis would be, if you see the overall setup wise, that Coal India. So if you see the setup on the monthly setup, definitely Coal India has been one of the strong outperformer. Today also we have seen a sharp move of 4 to 5%, and looking technically, definitely the stock can head towards 510 levels in the short-term basis. So first would be Coal India. Second within the similar space would be Tata Power. So if you see the setup wise, overall Tata Power also was relatively resilient in this market fall, and today after a very long time it is giving almost a channel of the weekly breakout after almost 15 to 20 weeks, and the risk reward quite looks good from here on towards 420, 430 levels. So I think from the energy space, it's better to pick with the selective outperforming counters that are really doing well. And Coal India and Tata would be a preferred picks within the entire energy space to play this theme. One more counter that I will add with to play the summer theme would be, having said that, would be Voltas. So relatively Voltas, if you see all the summer theme is picking out, and on the weekly setup, it's kind of a sideways that the stock is trading. So I think it's risk reward wise, definitely it is near support zone, and the stock some pullback can be seen towards 1600 levels going forward. So these three picks would be there within the space to play out the theme going forward.
Okay, so those are Arpit's picks. Aditya, sorry, before I take CPI, Aditya, give us a sense of how you view Coal India in particular.
So I don't have a view on this stock, so will not be able to comment on it.
Okay, sure. Okay. With regard to now, the data that will be coming through this evening is going to be the retail inflation data, or the CPI data for India for the month of February. And the retail inflation is likely to come in higher by around 3%. Of course, the base is unknown because there's been a change with regard to the way the math is going to be looked at. But rise in food prices is likely to cause a slight inch up in terms of the inflation on a month-on-month basis. January 2026, you saw that number, 2.75% is what was expected. My colleague Mithali joins in with all of the details.
Right, so India's retail inflation data for the month of February is expected to be around 3%, up from the 2.75% figure that we saw in the month of January, largely as the inflation in the food appears to have bottomed out. The uptick it is likely to be driven by a low base effect, which could push the food inflation higher on an yearly basis. The food and beverage inflation is estimated to rise to about 2.9% as compared to 2.1% that we saw in the month of January, with firming prices of pulses and edible oils lending some support. At the same time, the core inflation it is likely to inch up modestly to around 3.4 to 3.5% compared to 3.37% that we saw in the month of January. On the wholesale side, the WPI inflation is expected to rise to about 2.4% from 1.8%, partly due to the base effects and also the rising commodity prices, specifically the metals. However, a correction in the vegetable prices and also the subdued fuel inflation could limit the overall rise in the headline inflation. Meanwhile, higher freight and logistics prices and also the recent LPG price hike could pose some upside risks going forward. Talking about the crude oil prices that we see are hovering around nearly $98 per barrel, significantly above the RBI's baseline assumption of $70. Now, given the RBI's sensitivity estimate that a 10% rise, the rise in crude can add about 30 basis points in CPI. The current levels they imply a potential upside risk of about 120 basis points to the March CPI, though the actual impact it may be lower due to the limited fuel price pass through. Back to you.
Excellent. Thank you so much for that, Mithali. That's a definitive risk, at least at this point. If of course it's passed through at the pump, which hasn't yet happened, and which could in some form or shape insulate the kind of inflation numbers that we might see. Very quickly, Aditya, I have only a minute and a half to close. Would you have a view with regard to the impact of this on CPI? Very quickly.
No, I don't have a view, so will not be able to.
Okay, fine. All right. Thank you so much, Aditya, for joining us. Arpit will let you go as well. Thanks so much.